All right, let's break down the Q2 2025 earnings call for Compass Pathways. The stock jumped over 10%, which is pretty huge, but the reason why is probably not what you'd expect. We're going to dig into the real story behind the numbers for this company, which is right at the forefront of psychedelic-assisted therapy. And right off the bat, you can see what the market thought about this call. A jump of over 10% in a single day. That tells you investors really liked what they heard from management. There's some serious confidence baked into that number. So here's how we're going to tackle this. First, we'll glance at the headline numbers. Then we'll get into the real story here, their clinical momentum. We'll check on their financial health, their path to market, and then we'll give you our official rating and even a potential trade idea. Okay, let's get into those headline results. You know, with a stock pop like that, you'd think it was a massive beat across the board. But the actual numbers? A little more complicated. So look, the company actually lost a little more per share than the analysts were expecting. But, and this is a big but, for a biotech company that isn't even selling anything yet, that EPS number is basically just noise. What you really need to focus on are the last two lines. They've got almost $222 million in cash and just under $31 million in debt. That cushion is everything. It's what gives them the freedom to operate. So that brings up the big question, right? Why did the market just completely shrug off that EPS miss? Well, it's because the story here wasn't about last quarter's accounting. It was about huge progress in the lab that makes the company's future look a whole lot less risky. You got to hear how the CEO put it, because this phrase says it all. 2 for 2. What he's talking about is hitting their main goal in their first big phase 3 trial, which came right after a win in their phase 2b study. Now, in the world of developing drugs for psychiatry where things fail all the time, hitting it out of the park twice in a row like this, that's a huge deal. And this lays out their journey perfectly. They proved the concept in phase 2, then they validated it in phase 3. That back-to-back success is what gives them the confidence and, just as importantly, the data to walk into the FDA's office and start having a serious conversation about getting on a faster track to approval. Of course, brilliant science doesn't mean a thing if you run out of money before you can get it to market. So let's flip over to the balance sheet, because this is really the other half of what got investors so excited. You don't need a finance degree to see what's going on here. That giant mountain of cash just completely dwarfs their debt. This is what financial health looks like for a company in their position. They're not desperately trying to raise money. They're operating from a position of real strength, fully funded to get the job done. And here's the bottom line on that. Management confirmed on the call that they have enough cash to keep the lights on and the research going deep into 2027. That's a long runway. It gives them plenty of time to work with the FDA and prep for a launch without having to worry about diluting their stock. So let's tie this all together. They've got compelling data and they've got a full wallet. So what's the actual game plan for getting their COMP360 treatment to the people who need it? Well, they're not just sitting around waiting. They are attacking this from every single angle. They're in talks with the FDA about those accelerated pathways. They've even put in for a special priority review voucher. They brought in an expert to their board, a former CEO who has actually launched a brand new drug like this before. Plus, they've got a smart plan to use the thousands of existing Spravato centers to roll this out, and they're already expanding into treating PTSD. This is a really comprehensive strategy. Okay, time to put it all together. When you look at the earnings, the incredible clinical progress, and the clear strategy, what's our call on the stock from here? Well, first, let's look at both sides. The bull case is pretty obvious. If they get that accelerated FDA filing on a drug that's now been clinically de-risked, this stock could really take off. The bear case, of course, is that dealing with regulators is never a sure thing, the market can be unpredictable, and launching any new drug is always hard work. So for us, our rating is outperform. That 2 for 2 clinical success has just fundamentally changed the game for this company. We think the potential reward from this now much less risky asset, backed by a very solid balance sheet, significantly outweighs the uncertainties that are still out there. And that brings us to our final segment. For those of you who share that bullish view, let's talk about one potential way you could think about structuring a trade around this idea. So yeah, how would we play this? The key thing to remember is that the next big catalyst probably isn't the next earnings report. It's a future decision from the FDA, so we want to position ourselves for that major event down the road. We'd be looking at something like a long-dated call spread. Now, that might sound complicated, but the idea is simple. It's an options strategy that lets you bet on the stock going up, but it has a built-in safety net that limits how much you can lose. You're basically positioning for a big win from the FDA without taking on a catastrophic risk if things get delayed or don't go as planned. It's a risk-managed way to play for a big potential upside. So, to wrap it all up, this was a landmark quarter for Compass, and it was all driven by execution in the clinic, not by some numbers on a spreadsheet. With back-to-back trial wins and cash to last them into 2027, the big question isn't really if anymore. It's more about when. The key thing to watch now is how quickly the FDA moves. And as always, this is not financial advice.